Good morning, everyone. I'm Martha Stokes. I'm a retired chartered market technician on the buy side. So I am discussing things and trying to teach you how the buy side of the market views this. They are the largest of all the 12 different market participant groups, and they are long-term investors, and what they do matters. And a lot of times you are trading against them, and that becomes a problem. So you always want to make sure that you can be aware of what's going on with them so that you can have a better financial future and be more prosperous in your short-term trading. I know a lot of you trade short-term, but you also need a long-term portfolio as well. We have the NASDAQ up today, and we are looking at it to understand what's going on with the dynamics behind the scenes. You get all the retail news, chat groups, so on and so forth. But what is really going on, because the dark pools are in control of price in many areas right now. They are really in there deep. Yesterday, I was looking at my market condition scans, which tell me what the market condition is doing and the trading conditions are doing. Tells me what the buy sides are, where they're actively accumulating, where they're actively in rotation to lower inventories. They hold 4,000 or 5,000 stocks in these giant pension funds and mutual funds. So we have a lot of stuff going on. What I see and I notice is that there's this little support the market that they're doing right now, and in particular yesterday and again today it's popping up. What I looked for in my market condition scans was, okay, where are the dark pools? Where are the buy side institutions in quiet accumulation or hidden accumulation? Both of the software industries, both of the semiconductor industries, biotechnology, regional banks, they're buying all of those because the smaller funds manager who manages less than 5 billion in assets worldwide, 5 billion sounds like a lot of money to you, but it is not. And the SEC has determined that when the 5 billion is a retail side, not a professional side small funds manager. So they're all retail, and they are on every considerable social media and TikTok and all the other places that you go for information. They influence the news of the AI. The AI, Gemini AI of Google, goes out and searches all over the place looking for information, and it gathers it up and then it presents it in a neat little format that's really easy to use and study. But what it's doing is it's gathering retail information because there's no professional information on the public side, on the retail news feeds that you have. The buy side institutions have their own way of getting information about the corporations. Usually it's somebody going out and visiting the company, but it is very important that you understand that everything you hear and read is retail side. And I'm trying to present the professional side to you because I know that you can do better. And I want people to succeed in the market, because when you succeed in the market becomes more stable and more profitable for everyone. So we have these little nudges, and we have defined yesterday buy side bargain hunting. They're looking for bargain prices, and they're looking for it in software, both softwares, semiconductors, both. There's 4 industries right there. Biotechnology has been booming for a long time, and there are others that they're avoiding entirely. Are they buying oil and gas right now? No, they're not, because it's speculative and they're long term, and they know that it can crash like it did the other day. So they're watching and paying attention. Now, these are the support levels for an upside breakout. Right now, we're determining that whether the NASDAQ will break to the upside or to the downside. Right now, NASDAQ has been in this sideways trend since late September. So September, October, November, December, January, February, we're now into March. We're now into the 7th month. So that's quite a long sideways trend. It is trying to pattern out excessive gains, and the buy side institutions are indicating right now that they expect certain industries to move up no matter what happens. You have to understand that the economy is led by the stock market, not the economy leads the stock market. You're so misinformed by that. the companies have to improve, and then the stock market buy side institutions buy, then pro traders, then smaller funds, then you. That's how it all works. You should be buying with the buy side institutions and trading with them because there's a lot of opportunities. There's a lot of beautiful entry signals set up when they're accumulating stocks that are at low prices. And it's pretty reliable because they'll continue to buy that stock and move it, nudge it up slightly until it reaches its fundamental level, and then they will pause. And then the pro traders will take over and they will do the nudges, and that will cause the HFTs later on to gap it up, and then smaller funds, VWAP orders follow that. That's how this works. And you need to recognize that and say, okay, I should be looking for the dark pools. Where the heck are they? Where are they buying? Well, they're not buying at tops and they're not buying speculatively. They just don't. They sell and they form a rounding pattern. So it's very important. And I wanted you to see in NASDAQ that you can see these patterns even in an index. So if you like to trade ETFs, you can trade the Qs because they're planning and they're expecting at some point that this will break to the upside. Now, we have a lot of bad news. We have all kinds of scary news. But even if it breaks to the downside, it will come right back up, just as it did with the flash crash in April of last year. Why? Because this is where they feel a lot of the stocks fundamentals that they're buying are in this level, and they're buying specific industries. And that is really, really important for you to understand and know that the buy side institutions are hunting for bargains right now, and they are supporting the market, and they are creating this buoyancy in the index NASDAQ. They're also creating it in the S&P 500, not so much in the Dow, because most of the Dow is really old technologies. There's a few new ones, but not as many as in the NASDAQ. And if you go and study things, you'll start to see the patterns that are going on. If we look at a weekly chart, we can see that we have support level that kicks in here because this is a weekly. It's kind of diverges into this, and then there's support here, but this would be traveling into bear territory, so we would want to move this support level below. But this is a long, long ways down, 21,516, and we're at 2025 at this point. And so we are 2514. So it's got a lot of room to find support levels, and surprisingly, in some ways, it's finding it right here. Why? Because there's so many companies that have been sold down with flash crashes and HFT AI making mistakes and all kinds of problems, that there are a lot of bargain price stocks right now. So if you hunt for the buy side institutions and their tiny footprints, they use time weighted at average price on with penny spreads. So they set the automated order on a time weighted average price once they've determined by quantitative analysis. And yes, they use a little AI for the quantitative analysis because it does a great job of searching through the company records to determine what's going on in the company. And they do that with their 4,000 or 5,000 stocks that they hold. And they hold them even if they lower inventory with rotation. They're not selling it out. They're just lowering the inventory to invest in more stocks that are startups, smaller companies that have high potential for new technology. New technology is driving our market. New technology will continue to drive our market regardless of what's going on. We may have some flash crashes. We may have some startling, oh my gosh, what's going to happen? The world looks like it's going to come to an end. But who is in control of the majority of the wealth of this nation and globally? The buy side institutions. They hold trillions and trillions of dollars of assets under management. It's stunning how much money. And who controls the money? Controls the market. Who controls the money controls the market. So you should be looking at the buy side. You should be studying what's going on, recognizing where their footprints are. They never have huge volume surges. Their volume will be slightly below average. These are all things that you need to learn and study because it's very exciting when you begin to open the window and see into the professional side of the market. All of a sudden you're going, wow, this is amazing. I never realized how much information is right here before my eyes. It was like the window was all cloudy and you couldn't see in. And now when you open that window and you look in, you say, oh my gosh, there is so much here, so much information, and it will make your trading more successful and more gratifying with less work. It's so much easier when you understand where it's coming from to set up some watch lists and really follow and take action when you need to, because you miss all the great entries because you're using the wrong indicators. You're listening to retail news, you're getting recommended stocks to trade, so you're always in late. You need to stop doing that, and you need to follow the dark pools. I'm Martha Stokes, and that's our topic for the day.